Alright, what's up you guys? It's your girl Alexandria B with Wall Street Been Black, and I am so excited to be back with our weekly swing trade watch list of the week. So today we are going to start off with my pre-check. This is my pre-market checklist for beginners, for me to get ready for the new trading week, and how I break down all of the information that you need to absorb to be prepared to enter into the market. All right, so let's go ahead and hop into it. The first thing that we're going to check out is the economic data for this week. This is so important that you know what is going on a micro level. Surprise, surprise, microeconomics is actually really important. So the screenshot that we're getting this from right here is marketwatch.com. Others like to look at Forex Factory or Econoday. It's the same calendar everywhere. Just go through both or all three platforms and determine which one you like, which one makes the most sense to you. So as you can see here, this week we don't have that much data to look forward to. This actually is a very short week. We have full days, Monday through Wednesday, closed Thursday for Thanksgiving, and half a day on Friday. So historically, this is a very low volume week, meaning there's not that much activity on the market. So immediately, right there, we should stop and pause. If you are a day trader, how much attention do you want to put into a market that has low volume? Sometimes sitting on cash is the best plan, all right? And then on Wednesday, we're going to see the initial jobless claims, durable good orders, GDP, PCE index, the pending home sales. Okay, they hit us right before the holidays. What's new? However, if you don't know what a lot of these terms are, which we don't use this in our everyday life, I do suggest going to econoday.com, because when you click on that site, you're able to click on the terms and it'll pull up definitions for you and let you know what's going on. And here we have our earnings calendar. And as we can see, there's not that much earnings reports that are coming out this week. Again, it's a short week. Some things that I am interested in though is Zoom, because I'm really watching their revenue year over year and quarter over quarter, all of that, because I'm very interested in their forward guidance and investing in them myself. So personally, I'm looking forward to their earnings report, as well as Dick's, because Dick's and Deckers, they move in tandem. So I am very much so invested in Deckers because I love Hoka and I love Uggs. And to own one pair of Uggs and one pair of Hokas, those two combined cost more than one share of Deckers. Hey, you heard it here first. All right. So this is our earnings calendar that we have for this week. All right, you guys, now that we've checked out the earnings calendar and the economic data for the upcoming week, now let's go ahead and check out our reference points. What I mean by a reference point is once we go over into the trading side of the market and technical analysis, you need to have a focal point that you can go back to that is going to allow you to get an indication of the entire market. The easiest way to do that is to learn how to analyze SPY. SPY is the ETF that tracks the S&P 500, which is going to hold. It's simply just telling us, child is telling you that it has the largest 500 companies in the world. It's mimicking that, okay? So use SPY as your reference point. So when I pulled up SPY, listen, interesting times. That is all I can say. For a while there, we did have us an island gap. And if you do not know what an island gap is, I definitely suggest that you do look that up. It is posted inside of the Family Reunion Discord as well. Just type it in the search bar. But we did have that here, but price ended up filling this gap on Thursday. And then decided to hold it on Friday. So with this, it does make me think perhaps the market will continue to have some bullish momentum to the upside back into the 598, 599 range. Now, we have not been able to hold a close above 598, about 598.50. So I don't think that I would look to long anything above 598, 599. I definitely wouldn't long anything past 600 until we saw price do a break above and a retest. Now, in the meantime, in between time, we are seeing price consolidate here at highs. All right. Be aware of that. Price is consolidating at highs. Now, if I pull up the 9 moving average, we do see that here on the daily time frame, price did close above the moving average. We are also seeing that average curling down as it's doing so. All right. But let's see if we continue to hold. So this week, what I will be looking at is 593 on SPY. Will we be able to maintain this 593 Wednesday? And before then, we sat and we rejected the 590 range completely. Now we are holding the 593, so I will look to see will SPY pull back to hold 593 as support, and then to look to long it into the 598, 599 range, which for me is going to be 598. I like to cut myself short. I'm not playing into the barriers. That's like going 60 miles an hour straight into a tree. For what? I see you right there. Let me go on and press the brakes. My bills will still be paid. However, I look to see that. Now, if we lose 593, I would not actually play inside the 593 to the 591 range. It would be a break below 591, and I'm looking to target the 585. All right. Very, very, very simple. Now, if price does make it back up towards this 599, 600 range and it rejects again, I need you to see that that's a double top. All right. Now, I would be remiss if I did not also check out QQQ, which QQQ is the ETF that mimics the NASDAQ 100. All right. It mimics the NASDAQ 100, not the NASDAQ composite. ONEQ mimics the NASDAQ composite. And I won't even dive too far into that. Just catch these gems. Is that the same chart? At a more affordable price? So are you telling me that maybe, just maybe, it would be more affordable to trade ONEQ? Anywho, what's that got to do with the price of tea in China? So when we're sitting here and we're looking at SPY or QQQ, which this is going to mimic the tech companies. We'll just say that. This is the tech ETF. Ciao. I dang near don't want to have nothing to do with tech until it sells off some. I mean, I'm grateful. My portfolio is grateful. Me as a trader, I'm like, can we get a pullback? At any point, can we get a healthy pullback? All right. So this trend line that I have marked here, this primary trend is from April, from this last pullback we had in April. I know we did have one here in August, but it did reclaim it the same week. September we held, and since this dip in August, this blue line is marking off the lows that we've had since. And we can see prices just really consolidating right here. We're not getting this break above the 514, 515 range. I'm curious. I'm very curious to see if price will break below the blue trend line that we have right here, which also has some confluence going on with the 9 moving average. So I'm about this 495, 496 range. I will look to see if the Qs continue to hold between 495 to 497. I know that's like a $2 range that when you day trading, it's beautiful. But I like to look up top. I take the moves from up top. All right. So I will be watching in there. Ciao. So now that we've checked out step 1, which was the economic data, step 2 was our earnings report. Step 3 was going and getting a purview of the entire market by looking at SPY and QQQ. Before we go into your ticker request, I want to look at a couple of the sector ETFs. So when I am looking at the sector ETFs, I personally choose to look at the Spider Select funds. You can also look at the sector ETFs for Fidelity and Charles Schwab. The first one that I want to look at is the sector ETF for consumer staples. I thought this setup was so interesting, you guys. Y'all see that bull flag? I know you see that. It's marked by this uptrend and then the lower highs and lower lows in a parallel channel. We can see here on this weekly time frame that price, look at that. It's breaking above this trend line. We got a beautiful break above the trend line, and this moving average that I have pulled up is still my 9 moving average. And this is a key level right here. So that's right in this one little spot. You got 3 points of confluence there. So this is something that I would pay attention to. Now, I also want to look at the basic material sector ETF, which is XLB. Again, I am strictly looking at the Spider fund. All right. So what I noted here was we have this tweezer bottom with rising volume on the weekly. On the daily, we see that price is rounding. I mean, just beautiful trend line here since June of this year, and prices steadily hit said trend line. Now, when I'm on the weekly time frame, the reason why I went ahead and had an alert set here is because it's at the psychological whole number of 95. My 9 moving average is right there at 94.73. So it's really an either or setup. However, basic materials, our economic data is telling us that housing permits and building starts are picking up. They're starting to pick up. Maybe, I don't know. That basic material sector, whether you decide to invest in it, trade in it, whatever. But one thing I can say is that you can never go wrong with basic materials or utilities. You can never go wrong with investing in those because we always need them. They're at the top of the supply chain. However, so this absolutely fascinated me there. And like we were saying, XLU, that's a strong breakout above this trend line. However, I immediately paid attention to the fact that the volume was actually decreasing as price was rising. Now that is an obnoxious arrow, but we're going to keep it since I already drew it. All right. The volume decreased. So these 3 days that price was moving up, it closed higher. The volume, which is showing us the amount of shares being traded, was decreasing. That doesn't match. So that's something that I'm also paying attention to there. And then here at XLC on the communication services sector. Google, child. Google. Listen. If we see a break above 97 and a hold above 97, you best be in some trades and some shares and some dollar cost averaging, whatever, in that communication services sector. I'm trying to tell you. This is a screenshot from finviz.com. I will link it in the description below. Don't worry, you guys. I got you. You do not have to pay for this resource to be able to, or for that resource to be able to pull this up. So this is a stock map. It's so nice and pretty. It breaks down each sector of the market, which we have 11 of those. And then inside of each sector is going to then break the companies down into different industries. So for example, when we are looking at the communication services sector, in there we have the internet content and information industry, most notably Google and Meta. The telecommunication services, where we're going to have T-Mobile, Comcast, AT&T, Verizon, and Charter. The entertainment industry, we've got Netflix, Disney, Warner Brothers, Fox, and so on and so on. This is the performance from last week. There we go. So if we're looking at this, we can see that Google and Target did not have very good weeks last week. Now, are they bad companies? Absolutely not. Not even close. Google is absolutely not a bad company. I would look at this and my investor heart would get happy. I would say, oh my God, Google is 4% off. Because you got to think about it. Why do you get scared when you see red on a good company in the market? But if you go into Neiman Marcus and you're wanting to buy a Louis Vuitton purse and you see a red tag on that, you get excited and you go spend money. Woo! I'm sorry. Did I just yell at somebody? I'm sorry. Let's get back to the charts. Okay, you guys, we're back on the charts. I'm so sorry. I didn't mean to yell at you like that. Let's continue to look at the communication services sector ETF. All right, so yeah, it hasn't been trying to break above these highs. So honestly, just because these are some candle body highs that we have here except for last week, I'd be looking below 96.19. Will we continue to hold like this level, this 96.20 level? I wouldn't do a good gosh darn thing to the upside until I saw this. You're going to need to hold this and then go up before I put my money into the upside on the communication services sector. Now, again, I'm on the weekly time frame. So price has been off of this 91, 92 level for the last 3 weeks. It'd be nice if you came back and retested it. I mean, that was all-time high. It'd be nice if you kind of pulled back and retested it a little bit and then allowed me to move back towards the 97. Now, I would exit at this 96, 97. Why? Because history tends to repeat itself. So if you rejected there once before, it is my job to play the game of probability and statistics. Statistics say that 100% of the time that price got to 96, 97, it rejected. Okay? So that's how you would have to play it. The safest thing would be a beautiful pullback, trade it back into all-time high and exit, and then wait to see, does this happen? Or does this happen? Or shoot, does this happen? Okay? You must wait. The break and retest is your friend. Now, the last one that I want to look at is XLI because, same. Why are you just stuck in this range? What are you going to do? 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 I'm going to need you to either break and hold, break and fail, or, just go ahead and lose this 139. And then my expectations would be to trade it back towards the 133. Or you could even leave the industrial sector alone until it did pull back and then go. Now, one thing that I want to say is historically, November and December, the industrial sector is typically pretty bullish. Now, let us check out your ticker request that you sent me. First up, we have Google. So I'm actually really loving this, what I see. I'm going to start off on the weekly time frames on everything. I do top-down analysis from the weekly to the daily to the hourly. And if it's something that I'm just, I must day trade this, that's when I go down below the hourly. But for my preparation, my pre-checks and all of that, I'm good with the weekly and the daily time frames. So with Google here on the weekly, most importantly, I want to point out that for the last 4 weeks, Google has met resistance at this 178.50. It has not been able to break over 178.50. And historically, price has not been able to break and hold above 178.50. Here, back in June, did we see that it broke above? Yes. It did break above for 2 weeks. And then on the third week, you started rejecting. June, and that was July. We come back to November, not able to make it. Now, what I have here is I do like to draw my parallel trend lines sometimes, and I'll show y'all the tool that you can use over here. On the left-hand side with your trend line tools, you go to the parallel channel. And then you would mark here. Now keep in mind that I had this trend line already drawn. And then you just click and you drag it down. I have this, which was a lovely little bull flag, right? And we got a breakout above there. That last week of October. Then of course election week, the week after election week, we've given we gave it back. So now we're sitting here at a level that was previously support here in this 164 range. We're sitting right there. And from the secondary trend that we have, I know normally y'all see it's blue on mine, but since I had the parallel channels drawn, the secondary trend that we see here, price did break below it on Wednesday. When we come to the daily, now you did break below here and hold. We can see that the buyer stepped in on Thursday at the end of the day. Look, they stepped in. But then on Friday, they stayed right in that range. I would look, because this is a trend line since September. So this is a 2-month secondary trend line that we have right here. I would definitely look for a price to retrace first. I would definitely look at that. Now that's what my 9 moving average. I do want to show y'all when I have the 20, 50, 100, and 200. I call that my swing trade moving average ribbon. Ooh, now the red is my 200 moving average. This is a lot of confluence that we're seeing right here at this level, from a key level, the trend line, price action, and the indicator. That's a 4 for 4, my babes. Confluence right here. Right here. I would very much so look for price to retrace. And if it is able to regain the trend line, then to, hey, okay. We're trading you right back into the, let's go ahead and move this here, into the 181 range. If price rejects, I'm going to go ahead and look to trade you down into the 156 range. So a beautiful setup there on Google. Next, we have Meta. Now on Meta, this absolutely interests me. Let's pull up this 9 moving average. We did get a close below there 2 weeks ago. You stayed below there again, but it's very fascinating. This price is just trading in a very, very tight range. We could honestly even say that price is consolidating here at highs. Curious, very curious. I don't like this tight range that price is in. I'm not interested in it. And y'all know this is a swing trade watch list. So that lower time frame just has nothing to do with me. But this tight little range in here has a lot to do with me. I would wait to see. Now, to be totally honest, for a strictly swing trading stance, is below 540. We'll say 542 or above 596. That's it. That's all. Now, if I come to the monthly and we really take away all that extra data, ciao. I know y'all see that. I know you see that. Now, if I go to the 3-month, previous high from the April quarter was 531.49. Ooh, I was almost there. It was about $10 and a penny off. We're going to go ahead and put that there. I think I'd look for price to retrace to the 531.49. And let's see what happens there. Now let's go back to the weekly. Now we have the moving average ribbon. So the yellow is my 20, which is, we got some confluence going on with my key level there, which was the 3-month high, which was a quarterly high. And the blue is my 50, which is, we got some confluence going on with my trend line there. I'm just, Now, if price continues to hold this the 531, maybe even if it comes to these previous candle body highs and previous resistance at the 543 and it holds that, I would look to take weekly trades perhaps right back into the 595 range, like the 595 range. Other than that, Meta is a let the market do what it's gonna do, and then you enter. The market movers are able to pay their bills by being ahead of the game. Us retail traders are able to pay our bills by following the game. Netflix. And I'm going to go to the monthly simply because it went parabolic. You went straight up, right? I don't need all of that data at this current time. So we're going to go ahead and just knock it out so I can see where my main levels are. So I know that this is absolutely the highs. Absolutely the highs. And this previous resistance here is what I have marked off for the lows. This range we're in from the 692 to 905 sounds huge. But again, a monster of a week, up $73.83 last week alone. A monster of a week, monster. So this is chasing a trend. This is where you would have wanted to enter on this low volume pullback. And then you see price broke that range because for 3 weeks, it continued to reject 769. And then it broke the range. And so we've seen for the last 3 weeks that as price is moving up, the bullish volume, the buying volume is also moving up. So at this point, because this is also all-time high, you can't really project where is it going to go next. Now, we could use tools like the Fibonacci levels, and I know like if you're really into SMC, that it dives into how you're able to predict future price movements like from past all-time highs as well. My strategy is simply wait for price to pull back. Yeah, you might have to wait a while, okay? So the first support level that I'm looking at is the previous week's high, the upper wick. So that was at 841 even. And I'm just going to go ahead and put this here. And I like to go ahead and click on the settings and, put that level on my chart. And then I'll go ahead and put it here at the previous candle body highs, previous resistance, which is in line with the weekly 9 moving average as well. And I have my range marked off for me there. We might go ahead and, I'd honestly really want to put it there where the candle expanded, but since price would be traveling down, let me go ahead and put it at the previous resistance. That's my line of thought. So on Netflix, as far as a swing trade, if you continue to trade it above this 905, you really need to wait on it to retrace and pull back and hold, because the biggest move is going to come from the retracement, whether it does that and it creates another new high, or whether it pulls back, fails to hold it, and you still have a very large move down towards the 841. And if it loses that, hey, if the 9 moving average hasn't moved up to this 840 level by then, right? Larger moves by just waiting on the retest. All right, now let's check out SOXL, which I also don't have charted. Was I prepared? I promise I was, you guys. So let's go straight to the monthly. Y'all know how we roll at this point. Now, these highs are from January 2022. I have more recent data over here. So I'm going to go ahead and put this level here. Wicks are tricks. So yes, I'm intentionally placing my level below the wick because as I'm trading, I'm not about to trade into the wicks. Again, that's like going 60 miles, 75 miles per hour straight into a brick wall. You already rejected there many times. We can even look at this big wick, right? Many times. I'm not interested in doing anything above 55 until it breaks 55 and then holds it. Pulls back and holds it and then goes up. That would be the only time that I would play SOXL above 55. That makes sense, my babes? Yes, back in 2021, beginning of the first month of, or January 2022, yes, we saw that SOXL was above it. But I see lots of wicks, meaning it rejected quite a bit. And here, you couldn't even make it coming back in 2024. Therefore, history, probability is telling me to cut the trade at 55. All right. However, or enter into puts at 55, but that's another. Let me stop. Now let's go ahead and we need our lows, which is, now this not even necessary to put this all the way down here at $7. It's just not. Because the last time that SOXL was 2 years ago, November 2022. And this is an ETF that mimics or that has semiconductors as its holdings. I'm not expecting to see the semiconductor ETF make it all the way back down to $7. Especially here on the monthly, we can see, look at all this support that keeps coming in. And again, remember, mean wicks are tricks. So just from looking at these monthly ones, I'm going to go ahead and put a level in about right here. And at the bottom, at those lows as well, right here. So we see prices stuck in this range with decreased volume. Yes, we're seeing bearish candles. Absolutely, we are seeing bearish candles. However, we're seeing bearish candles in month over month, 4 months in a row. The volume, the selling volume has decreased. Curious, very curious. As we're seeing these huge upper or lower wicks, showing us that there's buying demand every time price gets down towards this 24 to 28 range. Now, I'm saying these wide ranges because, again, remember, I went straight to the monthly. So now we come back to the daily time frame. And we see, do we want to adjust our levels a little bit from looking in here on the daily? And this cluster of highs right here fascinates me. So I'm going to see, because these lines are not glue, what happens when I move it. Oh, perfect. Y'all see that? Let me put it back where it was. And this is what I was saying was perfect. How my level aligned over here. But let me put the level back where it was. So see here, and I use this as my reference point first. And I said, well, look at these highs right there. And this is more recent, July 2023. So then when I move that there, look how it aligned over here. Period. Which then would make me want to go ahead and move this up because you're just not relevant to me. You're not relevant all the way down there. You're still not that relevant here at 14 because we see that price is holding this 23. However, we're looking at the full picture. All right. So I'm going to adjust this one as well based off of, because I can see more data here on the weekly. And I used this, let me put it back. I used these highs historically first, right? Because this is a game of probability and history. So I used those highs and moved the level there. And I like how it lined up over here. That is these resistance levels here. I low-key really just want to go ahead and move. There we go. Using this as my reference, move that down to those highs and okay, boom. Because now I'm just pinching pennies. All right. So cool. If we wanted to do a little trend line in here, I mean, I guess we could do that. Because you can also set alerts on these trend lines, y'all. You can pull this up and set an alert on your trend line to let you know what it's doing there. Now, honestly, I like how price held. I'm not gonna hold y'all. I like how price held. We go down to the daily with SOXL, a break above the. I mean, look at that. Look at the alignment here for the 9 moving average on the daily at the 28. Would you say 28.50, 29 range? I like that for a break above there. I like it. I likes this. Me, I'm targeting 42. Actually, no, I wouldn't. I would target the weekly. So 34.38 first. I would target the high here, which is also where the 9 moving average is. And if it was able to break and hold above the 33, 34 range, I'm looking to go into. I look to go into this 41 from there. Okay, pinch and pennies. Let me put it back there. SOXL, you kind of got you a nice little setup, but I would definitely look for this above 28.50. First target the 34.25. NVDA, what you doing? What you doing? Now, I know that these levels look different than the orange dotted lines that you will see. This is how I know that I marked off dark pool levels right here. I do have another video on my page where I show you how to interpret and use dark pool levels. So make sure y'all check that out. You breaking the trend below the non-moving average. The volume to the sell side has increased. You close below. Very simple, the non-moving average is here at 136.40. What is NVIDIA going to do at 136.40? If you hold that, I would look to trade it back into the candle highs, body highs of like 148. If you lose that, I am then looking to trade you down into the 125, which just creates a red tag sell. SMCI, listen, are they delisting? Not. Delisting? Not. Delisting? Not. Why trade something this volatile? Like, don't let FOMO. That's all I got to say. Don't let FOMO get you caught up. Don't let FOMO get you in hype, get you caught up. All right. Palantir. How y'all let this freight train leave? All right. Now we come to the daily and it's like, well, how do you trade something that's at all-time high? Child. You wait for a good size pullback. Keep in mind, this is our swing trade watch list. This is our swing trade watch list. You have to see a pullback in order to successfully swing trade. You must. Now, I would look for a reject at 65.83 because historically it hasn't made it above the 64-65 range. Like this, 65 to 66 more so. We haven't broke above there, so I would look to see if price pushes to that range and then rejects. If it does break across, every day we lit, right? I would look for a pullback. That would be safest as far as swing trading. All right, so fascinating. I would also look for a reaction at 59.50. Will Palantir continue to hold? And then you could look to trade this back into the 64 to 66 range. Or if Palantir does in fact lose the 58.50, then we should anticipate a return down to the 53.25 range. I started through those numbers, y'all. Zoom in, rewind. SOFI. SOFI. Let's go to the monthly and just look at this beauty that is this breakout of October 2024. And then in November, you can see where price did pull back a little bit and then broke the October high, which was also the high from August. Now, to make it exact, the high from August was $11.70. And let's go to the daily and see exactly what day did we break the $11.70 and what did it look like when it did so. Right, we can see that price was holding the non-moving average. Broke above it with low volume. And then boom, that volume came in Friday the 8th. Y'all know what week that was. So that makes on the 6th it broke above. By the end of the week, we had that volume coming in. And then look, you got this beautiful pullback the week of the 15th. And then last week, the next break above. So you see what I'm saying? When price makes new highs, just wait on it to pull back. You're not going to miss anything. Except a couple panic attacks. And just wait on it to pull back to a touch of support. In this case, it held with the average. And then you get just this beautiful move up. Now, since it crossed above this new level of this 13.95.14, wait for it to pull back and hold. And then our next level we're looking is into the 18. Absolutely beautiful, beautiful opportunity. Now, if it does retrace back, or when it does retrace back to the 14, if it dips a little bit more, that's okay. It's going even more on sale, back towards the $12 range. That's okay. Don't trade the inverse move because the momentum in the consumer sentiment is very bullish. So don't trade the pullback, but watch for a pullback. Then we have IBIT. Bitcoin, Bitcoin, Bitcoin. Listen, y'all. Again, freight trains, freight trains, freight trains, freight trains. I don't allow FOMO to, now I'm not negating, I'm not down talking anyone who asked for this ticker. I'm just saying you asked for my opinion. And my opinion is I don't enter into freight trains. That's called FOMO. I need that. I need a pullback. I need a pullback. And maybe the pullback ends up being the previous highs. Not from last week, but the week before, and close a fair value gap, right? But this is a very attractive level in here. Clearly, they got a lot of money in here because of the fact that they gapped it up when we couldn't even participate. They said, no, this money is just for us, right? Now, of course, this is post-election, so Bitcoin is just absolutely insane, but the money is still, it doesn't matter, right? Technical analysis doesn't leave, and it isn't negated just because the market is euphoric. Nike. Ooh. Now wait a good gosh darn minute. Ooh. This is the last time I traded Nike too. Is off of this trend line hold. And then I exited at the 89 level. I think I did puts. I think one day we traded puts on the break of the secondary trend as well. Day traded puts. But look at this beautiful hold back down here in this previous demand zone. How do I know it's a previous demand zone? Because it held it with lower bearish volume, lower selling volume, and then the buying bullish volume picked up. Then this is where it pulled back and it held, and then you get this beautiful volume spike. Then earnings came and it dropped back down to this buy zone. And you got this beautiful hammer right there pushing at this resistance trend line where the 9 moving average is. To me, safety is above 80. Or I'll round it up, above 81. I would look to trade it into 84, 88, and above there at 80. I got some questions. Is the kiddies buying, or the people's buying? You know, I got some questions past there. This is set. Ooh, let me set my alert. Cause what they say, you gotta put your oxygen mask on first. Nike Leap. Look on the, come on, weekly now. Technology, man. So I don't even have to be confused and wonder what I was thinking when the time comes. Just the notification gonna pop up on my phone that says Nike Leap. Look on the weekly right now. Purr. And then for Tesla. Watch Tesla between the 340 and 360 range. Trade calls off 340, trade puts above 360. If it breaks 360, going to 371. If it breaks below 340, trade it down into 316. And that was the end of my watch list requests. And that is the end of our weekly swing trade watch list, you guys. Make sure you check the description below because I linked the resources that we looked at today, as well as entry into my free stock market chat room. Come in and say hey. I'll see y'all next week. Bye.